Good morning, evening, and afternoon to all my viewers. If some of you wonder what happened to the previous video, that video was absolutely cursed for all the reasons, background noise, or whatever, you name it. And so yeah, I'm just making a new one real quick. For those who don't have a lot of time and want to have the bottom line real quick, I'm just gonna say it straight out loud. I am expecting a major correction to, if we're looking at the S&P 500 and of course the according price levels with regards to the major indices as well, the rest of them, Nasdaq and so on. But we will talk about the S&P 500 in particular to give a frame of reference and some framework to what I'm talking about. My expectation for the price action in the near term future, no, I'm not talking about a day or so, I'm talking about potentially again, first of all, we're not here to play the time game, if anything. Those who know. Technical analysis is more about the ability to calculate, identify, and know, because of how the structure of the cyclicality and the various technical tools that are actually very mathematical and are interpreted into geometry, and the ability to measure point to point and understand where the following points potentially should be within some framework or range, if you will. Since the market does still have its ebb and flow and a little bit of volatility on top of the absolutely accurate levels that can be found out using the technical tools. So the bottom line is that although you're saying mostly slightly, if here and there we have slight corrections, but mostly you're seeing price going higher and upwards, and you're thinking to yourself, first of all, that's irrational for, well, all the reasons, but more so you cannot identify and you're getting tempted to buy in, and I understand. But the bottom line is that what I'm about to show you, and as I've been trying to point out in my recent videos, for example, a couple of weeks ago I made a video talking about a market tsunami, basically a bearish tsunami signal. We're all effed about 9 days ago. And some of you are thinking and waiting, Greg, well, it didn't happen yet. Of course, that's part of the ability to analyze forward. So then you will not cry within a couple of weeks when it actually is going to happen. Oh, how come no one told me, and how come no one warned me, and this and that, and all sorts of noise, you know. That regular bullshit that most of the public, says when they're incapable of taking any accountability for their own lack of effort put into learning what's actually going on. And I know it's none of it is actually easy when done right. Nothing valuable ever comes easy. That's just something you all understand and know by now, I hope. And you're adults, and you just know that as a fact of life. Now, the fact of the matter, I'm gonna go over the momentum and the structure and everything we're seeing. And I'm going to show you exactly why my assumption is that we're going to be seeing within the following weeks, maybe, of course, it may get and happen a little longer. I'll show you exactly how we still have a little bit of bullish momentum to be purged. Purged is spent. It's not just, we just have to wait until it sort of dissipates into nothingness. No. That momentum has to be spent, but there is very little of it left, and we will see at the indicators and the signals that are indicative of that momentum basically failing and coming to a stop, coming to an end, if you will. And normally when the market does happen to run out of one type of momentum, it basically turns around, turns over, if you will, and we get to see the other side, the other directionality play out, usually for some time, given the cycle and the length of the leg that we need to be, have had done, given the conditions, given the setup. I hope that explanation kind of explains how technical analysis allows you to use these structures to predict the upcoming levels, which are going to be tested as we make our way through that process, through that cyclicality, if you will. Now, I'm going to go over right now the time frames. The bottom line is basically that we are expecting a turnaround, if you have not yet understood that from what I was saying. And we're gonna go over now over the momentum. Of course, we have our new layout overlay right here, right above me, as you can see, that describes how the stochastic RSI functions and what basically it's describing. And we're gonna go over the stochastic. We're gonna go over the timeframes and gonna use stochastic RSI to identify the directionality of the momentum of the upcoming sessions, all the way down to the upcoming weeks and so on. Now, on the 1 minute, as you can tell, we are now objectively bearish, but it doesn't play major role right now. It's not, unless you're, you know, a trader and you do options, these things kind of don't matter to you. We have some interplay within the framework of the channel you're seeing right now that is active and has been maintained since the beginning of the session. Pretty young and, you know, a trend that's potentially not going to get held. We're not going to get held in for long, potentially. Let's see what the larger time frames are saying about the momentum. On the 5 minutes, we're about to run out, which is quite indicative. And again, as you can see, a longer duration momentum tends to show up simply because we have more data included into creating that channel, and subsequently that channel lasts longer, rather shows us a price action that has been a prisoner or subject of that channel for longer. Now, so the 5 minutes is quite indicative that we are about to run out of momentum. As you can tell, whenever we run out of our bullish momentum, even if we run high for temporary, you know, for somewhat temporary, and then it happens to be above the 80. If we do run high again, we tend to have a little bit more bullish price action, but not necessarily. For example, right here, you see we've been held back by the median and we're not able to use up all that momentum. So basically what this shows us is acceleration and deceleration, and the levels are important because they allow us to see where potentially we're going to get held back by, or which levels or which forces, in fact, because there are multiple different forces in play. Right now you're seeing a rather simple structure for those who want to kind of understand how a full chart of support and resistance levels would look like. It would look like something akin to this. It's just going to be very dense with noise and stuff, and so I'm not using this to show you guys, although what I want to point out actually quite you know, well drawn out on this chart. And this is what I show to my, I know it's quite crazy, but yeah, this is what I show to my members oftentimes, and behind the scenes, the things before it makes it to the videos, and how I'm trying to explain how we're going to have some form of a head and shoulders structure. And right now we're going through the last final minutes of it. To kind of explain that idea, I mean, if I would ask you a simple question, I found this to be a very good analogous to explain the whole idea. Why one hump or rally of bullish momentum versus another make a difference? Now, if you think about it, when does, you know, today become tomorrow, right? On the last 59th minute of the day. Makes sense. But if you think about it, we have these we have the segmentation throughout the day, this hourly segmentation, and so we have multiple 59th minutes happening throughout the day. How come this particular 59th minute makes a difference to any other ones? I mean, if you think about it, just an hour ago we had another 59th minute, and an hour before that we had another 59th minute, and an hour before that we had another 59th minute. How come this one is different? Because this one is the 59th minute of the 11th hour, and so only now, when that 59th minute transitions to that 60th minute and we transition to the first minute, basically we are what? In the new day. Now we transition from, if it was, let's say, again, just for the purpose of this, the 11th, now it is the 12th. Okay, now you understand how one hump or one rally, although appears to be almost identical to any other, can make a difference because of the cyclicality and the segmentation we have. So imagine we have multiple of these end segmentations throughout the day, throughout the week, throughout the month, throughout the quarter, and so on and so on. But which ones matter? The ones that are at the end. Or in fact, I will give you a little bit more of an insight to a little bit something that you actually should have understood by now. Not that point, but rather that point of transition. Because not always when the momentum becomes from bullish to bearish, it is immediately all that evident and clear as daylight. No, sometimes that transition tends to be and have in it somewhat enough corrections. For example, if we've been running bullish, what most of the people will tend to notice throughout the stagnation we have at the top is the bullish action, not realizing there's just as much bearish price action, and this entire structure is all about the turnaround that's about to happen for a balancing act that the market likes to have. The market really likes balance, and fair price usually will be found in the middle and not at the edges of the channel. And so what we see is, when it comes to the momentum fading away and transitioning to the other side, is this transition from side to side while still working its way within the overall larger framework that is identified via the diagonal channels, the trends, if you will, the support and resistance levels that you see that stem from other technical tools, and so on and so on. There's a whole variety of forces and facets to this whole system that allows you to identify various support and resistance levels and which ones are going to play a major role. What I'll tell you secretly, mostly the points that actually play a major role is the intersection points, where we have both, for example, the diagonal and the horizontal levels play a major role. Vertical levels don't really, I wouldn't say they don't exist, but they simply are inevitably almost incapable of being accurate, because they determine points in time. And something that I said before, technical analysis is not about trying to time the market or measure particular points in time. This was just an analogous using the 59th minute to explain how, again, one wave can differ from another, but rather we still work off the function of where these partitions end and begin. This is a beginning of a partition, this is an end of a partition. This is a beginning of a partition, this is an end of a partition. Of course, it is a little bit more complex and there's a lot more to it. Fractality, for those who understand the terminology and what that means, and plenty of other tools and calculations and facets to understand how that structure looks like, and why, although when we use such technical tools as the stochastic RSI, it is basically linear. Linear tools tend to make it very difficult to read the actual directionality of the overall trend. What they do allow us to read is the near-term directionality, and using that we can determine the overall structure given the support and resistance levels that we're bound to test. So if, for example, we're bound to test various support and resistance levels that are on an incline, we will see what? Higher highs, right? Something that's kind of, even though if we'll see slippage out of the channels, even if we'll see slippage out of the channels on the lower end, which will feel very bearish, because that's just the nature of the trend. It is what it is. On the inner larger trend, sometimes, not sometimes, well, that's just how it works. Always we're going to have inner trends that themselves will have inner trends. It's all about the overall directionality, right? Which, by the way, some people are failing right now to identify about the market. And I'm sorry for rambling all so long, but I really do find that it's also important for everyone to understand what it is that I'm trying to explain and highlight, and how these systems function. And although right now we're seeing a little bit of bullish price action, what most are missing out, that the market is actually building up a larger head and shoulders structure. In fact, those who remember back in the day here, I was making videos how, although the vast majority of the analysts in the market were hoping and thinking there will be a bullish channel right here playing out, and lo and behold, I was right. We actually ended up having a correction, and in fact, finally, when we started reaching what I would, again, now we know is the bottom of that entire trend that we had, while everyone else starting to get convinced and finally becoming more so bearish than they were, and me, the bearish guy, in fact, you can scroll down to my other videos from back then and watch them. And I kind of was saying in those videos, I hate to be the voice of reason for the bulls, because they end up not appreciating the same information, or an opposite sort of directionality of information, because it tends to stand against them. It's not the popular opinion for them, but both of these analysis and the predictability of these things stem from the very same tools. Basically, me knowing that we're going to have a downtrend, as much as they hated it happening, it happened, and the ability to identify the downtrend were the very same tools, using the very same tools that allowed me to identify an upcoming uptrend, a major correction before most people even realize it's happening. And while everyone else even the bullish people were becoming bearish, I was still able to be the voice of reason, because it's not about my opinion, it's about what the charts are showing that they are working their way into. Technical analysis is not about the gut feelings, but rather about calculations and measurements. Now, so the current structure we're going into, those who are familiar with the terminology will know what I'm talking about. We are now building a quite large head and shoulders harmonic pattern. You can kind of see it on the screen right here. Here is our left shoulder, here is our head. And those who don't know, by the way, throughout this period, I'll show you that on the other chart, we've generated, or rather identified, found a very major strong support and resistance levels, because you can resistance level, because as you can see, it played out and was actively performing its thing, and the market been respecting it back then around October 25, and then again November 25. If I'll zoom in, you can kind of see that there is almost an imaginary diagonal line that played a role of support, well, resistance in this case, and then onwards when passed through and crossed over. Since it's descending, it's easy, although we were moving sideways, we ended up using it, and we found support on it later down the line. So from resistance to support later down the line. Now, and by the way, it did play another a role again later down the line right here, just recently on March 2026. Of course, I can use smaller time frames, or you yourself, I'll just show you that this interplay on a different chart where maybe it's going to be a little bit more difficult to see, and yet I'll show you because here I simply don't have it all that accurate. And so my presumption here, given the momentum that we're going to go over here, it shows that we're potentially going to see bearish momentum, a shift over from bullish to bearish, and that is quite indicative of that structure of us building out that head basically, and that given the structure and the support resistance levels that we're already familiar with, it's quite probable and safe to assume that this very level, this diagonal level that we're already well familiar with, will play the role of the support again once we break down to that 61 level, 6100 handle-ish area. Again, I'm not trying to give you a precise number, but again, a given range. And again, this entire thing is not going to happen throughout a singular movement, but rather it's going to be sort of procedural. It's going to have steps and processes to this, and it's going to be gradual. There will be on and off periods where it's going to be bullish, bearish. I'm not saying exactly it's going to look like so, but I'm giving general guidance to the overall kind of behavior and the expectation to the overall outcome. Again, even when reaching that 6100 handle, we may slip below it, because that's just how the market tends to behave. That's kind of normal, right? Even if the low is somewhere, I'm exaggerating, but the low, of course, if it's going to be steep, since we do know the downward trends, the back end basically, if you will, the bearish trends tend to be quite swift, quite quick, and whatever it takes, if it takes 3 months to build this out, we can demolish it within 1 month, and sometimes just a couple of weeks, a handful of weeks, if you will. Now, so why are we even thinking this is going to happen, Greg? Where is the evidence or the signals? By the way, for those who misunderstood what I was saying in my videos recently, when I was saying, again, the market tsunami, that we're all effed and all that beautiful stuff, all I was saying there, that's exactly what I was referring to, is that major move to the downside that I'm about to show you right now, and not anything else, not the tiny day-to-day, ebb and flow fluctuations that we have inside of the smaller channels. Those are simply insignificant. So if we pay attention right now, let's say, for example, we focus on that more so medium time frame, we're like, Greg, right now it's bullish, the channel is bullish, what's the problem? Where's the issue? I don't see any issue. In fact, it looks pretty continuous, very nice, but that's because you're hyper focusing on the day-to-day ebb and flow. If you start zooming outwards and looking at larger time frames, for example, the 4-hour, which is very close to our daily, okay, basically we have 2 candlesticks per day, it's quite indicative that we are about to have a crossover of the forces. And if you read how it explains the stochastic RSI right above me, whenever we have the crossover of the forces, right, the green line becomes recessive, and rather the red line becomes dominant by becoming the upper line, just like here, and it then signifies loss of momentum, and of course a downwards price action somewhat. Some of those are temporary and shallow, and some of those tend to be quite longer and deeper, right? It depends on where we are. The same way that was the 59th minute, the same way that was the 59th minute. What's the difference? Different place in the cycle, and so different outcomes overall. And by the way, what you're seeing is just kind of a zoomed in, broken down way of seeing the entire structure. For example, if we're right now on the 4 hourly, right, and it looks like a whole bunch of noise, and I will adjust this to be, let's say, a week. Now suddenly the correlation between the stochastic RSI and the price action make a lot more sense, because our 4 hourly, what it is showing is the noise inside, versus the weekly superimposed looking at the very same chart showing us the actual overall loss of momentum, meaning it takes a lot more data when it aggregates the data to generate the channel and understand the larger directionality, kind of how I was explaining just a couple of minutes ago. So a channel temporarily or internally, if you're hyper focused and zoomed in, may appear bullish, but you don't realize it's a bullish channel inside of a bearish larger channel. And guess what? The larger channel always plays a more major role, and the role of the actual directionality. So those who were seeing, for example, at the time our weekly, could have identified and understood that we're actually going downwards, and subsequently we're going to have downwards price action expression, right? And then of course when it shifted over, that's pretty much you're seeing right now how was I able to know that we're going to have a downtrend, because again the weakness showed, and the more it was excessive, the clearer it has become. Of course we can of course correlate it to even larger time frames, and that's why I highly recommend. I know it sounds complex, and it is. I'm trying to oversimplify it, kind of, giving you the preschool explanation for something people normally study at universities, right? So if you want to understand the in-depth analysis and how these tools work, I highly recommend joining my community. By the way, right now it's actually discounted. That's another reason why you should. Instead of having you guys deal with all sorts of promo codes and headaches, I simply kept the prices lower temporarily. Right now, as you can see, the basic tier is only $10 a month. Of course, you can make it even cheaper by paying annually, $72 instead of $90 for the full access, for which guys and girls and members we have meetings. They get access to my charts, portfolio, charting 101, all sorts of wonderful things. We have Discord meetings when you can see my face, I can see yours if need be, but mostly we share charts and actually talk and explain how these things function and work. Now, I highly recommend joining, because that, of course, will give you full access to my Discord and all sorts of beautiful things that we do in the framework of the Discord. But mostly, I highly recommend joining my one-on-one academy, in which I tutor you and teach you one-on-one how to do proper technical analysis on your own, and not to be dependent on various, bubbleheads in the media, CNBC, Fox, and all that crap, Bloomberg, even you name it, right, and all the websites, so you can actually analyze on your own and understand where things are headed, right? Be independent, if you will. And we have, as you can see, all sorts of wonderful things. Of course, the Academy members get the most perks. Here they are. Yeah, that's it. Join in so you can share the wonderful information that I share with my members. As you can see, they were ahead of everyone, knowing what I'm about to talk about in the current video. I've been sharing this stuff today, yesterday, more so. There are different targets that we're referring to. As you can see, for example, 5,700, a bit of a lower end of that general channel that you can see right now. We're working our way within the framework of. And of course the explanations to why and potential other behaviors that we might see. Of course, now we're looking at the monthly channel, which, by the way, is very misleading right now. Looks very confusing, I know. The monthly is very, very, very confusing. So basically, those who know what we're looking at, give me a second. Let me remove some of the noise, boys and girls. Calm down. I know it looks confusing, right? So if we look at our monthly and just kind of bring it back to be normal to what it's meant to be, chart original, you will see that we're almost having confluence, we're having the meetup of the forces, but almost doesn't count. This is very scary, and I know it's too close for comfort for some. I know, and that's always how it's going to be like, but you need to understand the same way the smaller time frames are working their way within the framework of the larger time frames, we have a larger time sort of framework which we're working our way within the framework of, and in fact we are on a larger downslope that most people are blind to or cannot see, and in fact we're starting to curve inwards. For example, that was our half year. Here is our quarterly, in which I was trying to indicate that all the noise you've been seeing in the past recent months is just the preparation and the beginning of that transition that I was just explaining to you, ladies and gentlemen, minutes ago, about how these things function. And so yeah, again, if you want to understand this in far better depth, I highly recommend you join the Discord, you join the community, the Patreon, you become a member of my academy ASAP, so you can understand to be ahead of the market truly, and not to be surprised, caught off guard, or as the quote goes, when I forgot right now, when the sea recedes. God damn it! Yeah, good. Yeah, wonderful. We get to see who's swimming naked, right? Completely lost my train of thought and had a blackout right there. That's just wonderful, because I was too preoccupied with the market and the actual price action. So again, most of everyone right now are too preoccupied with kind of, the moment to moment, day to day. Oh, but Greg, we're still going up. No, we're not. We're shifting over from a very bullish tendency, as you can see, directionality kind of trend, to somewhat more sideways, which is very indicative of that turnaround, which will end up being that peak of our head. Sure, we still may see 1 or 2 or 3 more days of bullish price action on the grand scheme of things, but believe it or not, once the momentum shifts over, it's going to be very rapid, very strong, and people will be unprepared, and suddenly everybody will start asking themselves, oh, why are we going down? In fact, that's kind of part of the trap. People will see how we test back and forth, but seem to be moving sideways. Of course, their gut feeling, because it serves them for the market to go higher, they will convince themselves that the various Tom Lees and the CNBCs and the Bloombergs are right, and the market's bound to go down, and the ceasefires and all that fog of war that's going on right now, and that is misleading people to think that the war is all over with and all that crap, without realizing. And look, I'm not gonna pretend to be the world's general to say that I know exactly what's the next step of the war is, or whether the Ebola virus is going to have a huge outbreak. Those who don't know yet, there is like this Ebola thing that's going on right now. There's so much going on, and in fact it's quite amazing that the market hasn't yet broken down given all the conditions. But again, that's part of the cyclicality, and whether you realize it or not, if there are partitions there to be still complete, again, the argument basically goes to whether we are right now on the 57th minute or the 59th. My word of advice, once we enter the realm of the 50th to the 60th minute, you don't want to be finding out. You don't be effing around and finding out, because the game is very dangerous. We climb very, very slowly because conviction takes time to build up, but we get scared very, very rapidly and stampede each other on our way to the door. So that's kind of, just plain old logic to why the price action tends to look the way it does. I hope that was clear for you, ladies and gentlemen. I know it took a while for me to make a proper comprehensive video of where we're headed and everything. I'm sorry I had some issues with my teeth, some dental stuff that I had to work out through, and there was a lot of bruising and pain. And even though still throughout the recent weeks I was able to make enough important and well done made, if you ask me, videos that convey the whole thing. Of course, they will be linked right now at the end of this video. They will kind of appear somewhere right here on the screen. If you click them, you will go to watch them. And just for the future, and I know I used to think that's quite cringe, and I used to think like I can't say, don't like anything, don't smash the like, don't do any of that crap, just give me your attention, just focus on what I'm trying to convey and show you, because that plays a major role in how things are going to play out. So yeah, really honestly, for future reference, if that's the cost of having your attention, screw the like, screw everything, just pay attention. It will be nice to hear from you down in the comments below your thoughts about where you think the market is headed, whether you think I'm crazy, you want to curse me out, you want to say how great I am, don't matter. You know, I'd like to hear your opinion. I used to be very sensitive to, you know, negativity in the comment section. Nowadays, I really don't care. It just kind of goes to show how some people are ignorant or like to comment while watching 4 seconds of the video out of a 30-40 minute video that explains in depth all the steps and everything. Yeah, it's up to them. It's their responsibility to watch this. You're not going to learn anything that is being taught in the university if you'll sit at on the grass of the university and stare at the wall of the classroom within which things are being held and taught, right? If you'll sit outside the classroom, guess what? You'll never learn anything. So that's why you better join the academy and actually take those classes to understand how I'm able to predict consistently these support resistance levels, channels, trends, forces, all of the above, and anything and everything that I'm forgetting to mention. Harmonic patterns, momentum, you name it. There's plenty. All of it plays a role in the overall equation to how we're able to identify where the market is headed. That's it, ladies and gents. I hope you enjoyed this video. Like and subscribe if you don't mind. I would appreciate that. Definitely join the community to know more. And that's it. I hope to see you on the next one. Ciao.